Happy Bloody Friday, everyone. And oh man, it is definitely a bloody Friday indeed. There's going to be a lot of stuff in today's episode. I'm going to be going over why the market is very, very sloppy and bloody right now. It is 11:05 a.m. Eastern Standard. I apologize if you hear my AC blowing in the background, but I got to keep my AC on today because, it's going to be a hot one for me. Welcome if you are new. I put out videos Monday through Friday on this YouTube channel, and this channel is relatively new. My main YouTube channel, NightmareRH, has 200,000 plus subscribers. It's a video game channel, and not a lot of people want to come over to this channel because, well, the stock market is very, very unpopular right now. So for anyone out there that is very much engaged in the stock market, you could very well make life-changing money because now is phenomenal opportunities as long as you do your due diligence and you pick winners. Obviously, if you pick losers, well, you're not doing your due diligence at all. I'm not a financial advisor. I've been in the market for 6+ years. I got into the market during Rona. Made a boatload of money during 2020, 21, even 2022. I came out in the green. 2023 was it was a bum kicker for me personally. And the reason being is because I didn't stick to my strategy. 2024, boatload of money, same thing last year. And this year, I'm still very optimistic, but we have so much pain. So I want to go ahead and talk a little bit about what's going on right now. And then in the 3/4 of the rest of today's video is going to be my updated SoFi price evaluation. So by all means, if you want to get to the SoFi evaluation, definitely skip ahead a little bit in today's video. But I mean, everything basically correlates to the price target for SoFi. Now, I did make a video on this YouTube channel. And ironically, it's the most viewed video on this channel. My price prediction for SoFi for the conclusion of this year. I made the video very early in the year, back in January, and I put a price target of SoFi in the high 40s and also in the low 50s. I think I said about $48 to $54. Yeah, hypothetically, if I still had that price target mentally about SoFi, I would definitely be a pumper. So I'm going to be going over where SoFi could potentially go to and why. And then I'm also going to give pretty much my own personal price target to what I personally think SoFi is going to be by the end of this year. Full exposure to myself. I am a SoFi long. I'm a SoFi bull. I've been buying SoFi since February of 2024. My game plan with SoFi is very long term, so not near term. I'm not trading SoFi. If you want to see my public profile on this YouTube channel, check out yesterday's video. I am doing a public profile challenge, but I own SoFi on 2 profiles. To be honest, I may actually start buying SoFi on a 3rd profile. Total shares, close to 2,300 total shares. I'm a retail investor, trader. I'm not some big Wall Streeter out there. There are probably plenty of you all that have more shares than me, and there's probably many of you all that don't have as many shares as me. Either way, if you are a SoFi shareholder, we are brothers and sisters. I do have some females that do actually watch me. I check my YouTube analytics, or maybe people are lying about what gender they are. But at the end of the day, we're all in this together. Doesn't matter how many shares we own. If you're a long-term investor, you're a long-term investor. Doesn't matter if you own 100 shares, 1,000 shares, 10,000 shares. You're really much in it together, right? Before I go any further, water, cheers. Oh man, it's going to be a hot one, like I said. Okay, not to mention I keep things very real around here. Real talk is always best talk, in my opinion, especially when it comes to stocks. So let's go ahead and get the elephant out of the room, out of the way. The market is beyond red. What just happened today, June 5th, 2026, And if you see this video in the future, maybe everything's going to be reversed. But what happened this morning? Well, this morning, we got some government data. Government data. Employment report came in better than expected. Unemployment rate, solidly steady. Why is the market freaking out? Because the market wants a little bit of bad data. A little bit of bad data to justify a rate cut. We have no justification for a rate cut at all. So, obviously, stocks that are very much sensitive to rate cuts or rate hikes, like SoFi, let alone the broader market that has very much been on a tear because of primarily the AI build-out, well, we are very much pulling back. We see SoFi definitely breaking below $17, which it was at yesterday. Honestly, it's probably going to head and trail back into the high $15 range. Not to mention the Middle East conflict. It's still not ending anytime soon. I mean, you're talking about over a week ago, President Trump said that the overall, there would be a peace deal and the Strait of Hormuz would open. I actually just got a notification on my phone. So another thing too is that, yes, this government data is positive, but the market really wants bad, not terrible data like we're going into recession, but the market just really wants some very, like, hey, the unemployment rate, it's ticking up a little bit, maybe 4.4. Okay, it's nothing terrible. It's not like 4.7, 4.8, 5%, but it's ticking up. Okay, we can see the probability of a rate cut coming back. The Middle East stuff really has to be over relatively soon. Donald Trump is giving comments now that the Strait of Hormuz won't be open until Labor Day. You're talking about over 3 months from now? Like, that's not going to be, like, anything positive for the oil and stock market anywhere at all. Oil has just really been fluctuating in the $90 range. It has to get 85 or lower, but primarily $80 lower for the market to stop freaking out about rate hikes. So until that basically pretty much happens, we're just in clown show right now. It's utterly red. And the way you make money in this market, I'm not a financial advisor, but from what I've done in the last 6 years is you buy the fear, you buy the blood. If you're a long-term investor of a stock like I am with SoFi, you pick up discounted shares for the future. If you are a trader, hey, you buy the dip, you sell the rip. It's a simple terminology here. From a trader's perspective on SoFi, the next 6 months, could very much turn around. Short-term trading, in my opinion, is called swing trading. It's anything less than 6 months. So if you're taking a position to trade SoFi, I mean, hey, SoFi is a speculative stock. It can move in the snap of a fingers 50% in either direction. We could literally be in the mid-20s. You can make 50% in 6 months, theoretically. We could be near all-time highs. You can make 100% theoretically. So being a trader in SoFi short-term, there are values, but that's not my own personal game plan. Now, getting to the actual SoFi price target for 2026 updated edition, I want to go ahead and refer to this because Anthony Noto, in the most recent interview, and I also showed this, I believe, in a video of mine last week, but this is what Anthony Noto is going off of, and I am starting to really pretty much go off this myself because it really does make a lot of sense when it comes to a stock like SoFi that operates very much like a bank, but it's really not a bank. It is very much a fintech where you have half of the revenue, which we really want to keep half of the revenue basically be technology-based, service-based, fee-based, revenue-based. Obviously, if their lending side explodes to the upside, and let's say their lending side goes to maybe 60, 70% of their revenue, then we are very much going to be labeled as a bank. But Anthony Noto, the man himself, has labeled SoFi at trading right now at a 2-time multiple of its tangible book value, TBV, tangible book value. Tangible book value right now for SoFi is roughly 7.2 bill. And they are going on a growth cycle over the next several years at a 40% clip. So they are growing their tangible book value 40%. Now, here's the thing. If Wall Street sees SoFi as a bank, we're going to be trading either at a 1 or 2 tangible book value, which is very bearish, especially being that they operate on a very much fintech kind of a style. But what can Wall Street, or I should say, what will make SoFi basically pretty much be valued at a 4 multiple, at a 5 multiple? It's very simple. If SoFi is going to get back to the 4, and by the way, understand that these multiples, they are not perfect, by the way. Obviously, right now, SoFi is $16.14. That is roughly about like 2 point something. I think like 2.3, 2.2 times multiple. They do not have to be perfect. But what can go ahead and get SoFi to $25 to $35? If you had to force me to put a price target on SoFi by the end of this year, it would honestly be between 25 and 35 bucks. My bearish price target for SoFi this year would be $25. My base case, which is what I believe SoFi is probably going to do, is probably around 30 bucks. And a bull case is around 35. There are other YouTubers on YouTube that are lying to you that are saying SoFi is going to be very much higher. Now, why did I say SoFi was going to be $48 to $54 by the end of the year? I made that video earlier this year. Earlier this year, there was not a friggin' new war in the Middle East. Earlier this year, oil was not at $100 a barrel. Earlier this year, we had no fears about rate hikes. Earlier this year, inflation wasn't like a rocket ship to the moon, okay? Actually, inflation really isn't going... It's increasing, but it's... Understand that the Federal Reserve is not going to get wigged out unless inflation gets to about 5%, okay? As long as we're below 5%, it really probably will not be something like as dramatic as people think it is. But a lot of people that have been in the market during 2022, they have a lot of PTSD. And me personally, I don't have PTSD about 2022. I remember 2022, and it was terrible. Inflation was going bananas. But at the same time, all this stuff is caused by geopolitical nonsense. So, here's the reality. I really feel by the end of this year, Iran is going to be wrapped up. I feel oil is going to be below 80 bucks a barrel. On a bullish scenario, oil could very well be below. Okay, I'll get. This is the way that you really should think about everything in life. Not just when it comes to the stock market, everything in life. A worst case scenario, what you think may happen, and then also something better than expected. You should always think about it in 3 aspects. And believe it or not, that is actually very much military base. I have a military background. I did 15 and some years, 15 and a half years in the United States Marine Corps, baby. Infantry, I spent over 10 years. I'm an Afghan vet. And I can tell you that those tactics are very much used in the military, let alone infantry based. So, oh yes, and by the way, the word companies is actually a military term. Like it's actually pretty crazy. Like it's everything in the stock market is very much like military orientated. But at the same time, me with a military background, I really feel that there should be peace in the Middle East. We have spent way too much in a wartime over there. Really much needed of peace. But any aspect of life, you got to go ahead and look at three scenarios: the bear, the base, and the bull. Bear case for oil is that it remains above 85 bucks for whatever reason. Base case of what I think is probably going to happen is being below 80 bucks. A bull case for oil is probably below $70. I really see oil being below 80 bucks. I see there's a lot of tension probably that's going to be prolonged. But I think that oil is going to not be a problem to be with people. Now, you could say a bull case is that we have midterms. Yeah, the Republican Party is probably going to want oil to be nice and cheap, right? And stocks to be very much higher. But maybe, honestly, things don't go in that aspect. And maybe the Republicans take a big ass whooping. You know, who really knows, right? So, later this year, I do see things clearing up in the Middle East. I see oil getting below 80 bucks a barrel. I believe that is going to put SoFi at kind of like a 3.5-ish multiple. That is my bear case, like, for this conclusion of the year. However, I personally really feel that SoFi could very much be in the high 20s, so 4, maybe 4.1, 4.2 multiple. So call it about 28, 30 bucks. If we go into a better than expected atmosphere, we get maybe 1 rate cut, or maybe we even get 2 rate cuts. SoFi's going to 35 bucks. Very much. Okay, very much SoFi's going to be going to 35 bucks. But it revolves around so many different things. So when it comes to being a investor, when it comes to being a trader, or just living life, you got to be looking at all 3 possible situations. The worst, what you think is going to end up happening, and also the best. And I really feel that SoFi, on a worst, is going to be at 25 something dollars. On the best, it's going to be at 35, and pretty much we could be smack dab in the middle of what I personally think is going to happen. I am very much optimistic that the second half of this year is going to be very much better than it is right now. I honestly think oil is hopefully going to maintain below 100 bucks. I think that the Middle East scare is just getting... It's getting to the point where there are scary things in the Middle East, but it's not scaring the market as much as good data, which is pretty funny. We got the new Fed governor coming out in about 2 weeks for the first time ever. Kevin Walsh, he's the new Fed governor. Let's see what he has to say. I believe that Kevin Walsh is going to squash rate hikes. And when the Fed governor comes out and says, hey, we're done doing rate hikes. Yeah, no. Stop being scared. Stop having PTSD from 2022. Okay, inflation is not magically going to go back to 10%, okay? We are very much on a upward trend for inflation, very much like below 4% right now. But we're not at the 5% danger zone. And on the flip side, our president has stated saying, hey, things are going to be wrapped up hopefully soon. So in conclusion to today's episode, I am not an idealist. I'm a realist, but I am a bull. I am a realist bull. And for someone to say that SoFi is going to be at 50 something dollars, it just... Okay, so how the hell can SoFi go to 50 bucks? Let me just go ahead and say this in conclusion. Here is what is something going to end up having to happen, right? What needs to happen for SoFi to go to $50? Let's break this down. Well, one, you got to get oil below probably 60 to maybe $50 a barrel. Good luck. You got to totally have zero geopolitical conflicts. Iran and Israel, they got to become bros. Good luck with that. Okay? You got to have economical data totally being ignored, and you also got to have every single Fed governor being on board. The Fed governor can be for rate cuts, but he is only one vote among 11. Yeah, it doesn't matter. He could be for rate cuts, but if 11 members of the Federal Reserve are not for rate cuts, good luck. You would need probably 3, 4, maybe 5 rate cuts this year. That is unrealistical. That's a pipe dream. If you are going to have pipe dreams in the stock market, you're going to get your bum handed to you like I did in 2023. Because in 2023, my only 1 year of closing with more losses than profits, I was in the red. I had a lot of pipe dreams. I did. And that's the reason why I got my bum kicked. And that's one of the reasons why a lot of people, they get their bum kicked too. So on a realistical price target for SoFi this year, this video is an updated 2026 edition. I'll probably be making another one of these videos maybe in the next couple months. Me personally, I really think SoFi could be $30 by the end of this year. If you see people calling for very much higher, it's unrealistical. By all means, I really do feel that I'm not pumping the stock because this goes with what the CEO has said. The CEO has stated, hey, we need to get rid of all this stuff and SoFi is going to be between 25 to $35. Pumping the stock is anything greater than $35 to like 45 and $55. That's pumping the stock. But here's the catch. The catch is that SoFi has they have the earnings to back a $35 stock. If SoFi goes to $55 for whatever reason, it's overbought. Oh, it is overvalued. Oh, yes, it is overvalued. It is significantly overvalued. So understand that, especially when you look at how to value companies. I honestly talked way too much. Hopefully this video definitely helped out people on a education basis. Motivated a lot of SoFi long-term shareholders to really not fear. I gotta go ahead and grab more water and yep, later.